Welcome to Profile Traders. This is Reza and you're listening to my market analysis for February the 17th. Since the last update, when we did this double bottom here, I warned you that the market was in a possibility of starting to go up and that nothing was going to happen unless we were going to break the trend line that we had in place to the upside, which we finally did. Now, obviously, as it is coming up, we will have to deal with this level of resistance that will come into play at 1940. So 1940 has to be monitored very carefully, because the last time we did the same thing, from this low here, we went to 1940 and then we collapsed back down. Can we do now the same thing, going from that same low all the way to 1940 and collapse back down? That is yet to be seen once we do get up there. If this happens, then unfortunately market will be in a stage of a bracket, and that bracket will be between 1940 to this low of 1804, 1805 that we did put into place with this double bottom. And if that's going to be the case, then we are going to rotate and trade within this wide range down here until we either decide that we are going to exit out of the 1940 for more retracement of the last leg down, or if this is going to be significant resistance and we are going to see a rejection back down, which could lead us towards the middle of the range, which will come in right around 1875. So if we have a hard time to break through 1940 and we start to see rejection down, on the way down we should be targeting 1875. Now, why is this happening? It's two reasons. Number one reason is that market finally is trying to digest the fact that that one rate hike that was done in December by the Fed was nothing but out of the blue, for no reason, no plan, no logic. It was just the Fed flexing their muscles to make them feel important. And 30 days later, the economy went into such a bad shape that finally Yellen and all the members are now yielding back. And as we saw into FOMC minute being released today, that they are very concerned with market volatility, the strength and the volatility created in the dollar, etc., etc. So in their minute, pretty much they indicated that in the very short term there is zero risk of another rate hike. So market like that. And number two, and most importantly, this is the week of option expiration. And as you all know, or if you didn't know, now you know, option expiration weeks are notorious for up weeks and extremely stubborn trend days like today, because it's all 100% manipulation in terms of what needs to be done with their inventories going into the end of the week and option expiration. In terms of the chart here now, daily support based on today's action is 1915.5. If we continue up, you already have the level. If we continue up, my upside objective has been for now 1940. if we come down, we need to break below 1915.5. If 1915.5 is broken to the downside, price should have no difficulty to drop to 1909 first, and then after that we will be dealing with today's low of 1904, then 1900, and then 1895. So these are the 4 supports from where we should start to see a bounce coming in. And if they plan to take this thing up, I really don't have much of a resistance before 1940. Now, as far as crude is concerned, I'm sure you're reading the news and you're hearing a whole bunch of rumors and agreements and production cuts between Russia, Saudi, Venezuela. First, Iran wasn't agreeing about the cuts. Then Iran agreed with the cut. I have no idea what is truly going on over there. There is a lot of misinformation floating around, a lot of news that doesn't make any sense floating around. All I know is the following. If anybody and their mothers sit down around the table and agree with the production cut, the minute they leave that meeting, all will go back to their office and cheat on the numbers they all agreed on. I know that. And if I know that, trust me, the $1 billion that are playing this market also know that. So there was a bit of a difficulty for price to remain itself above 31, and we managed to close below 31. Therefore, I have absolutely no problem now calling today's high 31.15 to 31.50 as a short-term major resistance. Also, if we go back and look at the daily chart of CL, we just touched this main trend line down and we were unable to pierce through it. Therefore, as long as the trend down is in place and we are unable to break through the trend line down on the upside on a closing basis, this market is vulnerable to retract and retrace a little bit of this last move up from $26 to $32. So let's see what are the levels of support that we need to monitor. First level of support comes in at 30.25. That will be the first level of support. Once we do break that, we should have no difficulties to coming down and hit 29.80. So 29.80 is the next level below 30.25. And if 29.80 is broken, then there is a POC down there at 29.24, which should be acting as support. So this one, you have to be careful what news comes in, what news comes out. There is a lot of noise and chatter out there, and definitely in the very short term, they can have influence over price. But in the big picture, until the very short-term downtrend is not violated to the upside on a closing basis, this market is still officially in a downtrend, and pullbacks should definitely be expected. On the upside, clearly we have to clear 31.5, and if we do clear 31.5, then I can definitely see a run possibly towards 32.5, at which point 32.5 will be massive, colossal resistance. This is Reza with Profile Traders. If you wish to learn traditional market profile with somebody honest, a competent trading room, check our offer from our website, profiletraders.com. Thank you for listening, and to the next time.